Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. 2017 will be probably marked in India's financial history as the year that saw the real emergence of the retail investor. Flushed with money that ordinary people like you and me are putting to work in the equity market, mutual funds have really taken over the driver's seat on Dalal Street this year, and they've pretty much ended the dominance, the absolute dominance, which foreign investors enjoyed in our market over the past so many years. Now, 2017 has been a kind year in terms of returns for all of us. But as we look at the market at all-time highs now, what should you keep in mind with respect to your SIPs and your other MF investments? Well, joining me on the show today to talk about all of these trends and what lies ahead are Chandresh Kumar Nigam, MD and CEO of Axis Mutual Fund, and Jinesh Gopani, Head of Equity at Axis Mutual Fund. So we have the gentleman from Axis Mutual Fund here to help us make more money, be smarter with respect to our investments. Thank you so much for joining in, Jinesh and Chandresh.
Thanks for
Chandresh, I'll opening thoughts, and as I said, it's been a great ride so far. A lot of people have tasted a lot of success with the kind of equity market rally that we've seen. How has this year been for you? Because you've seen the inflows come in, and obviously Axis Mutual Funds is sort of climbing up, I think, the ladder as well in terms of the charts, the rankings. So what has it been like?
So it's been really a fantastic year, especially after, if you look at the end of last year, 2016, when the markets were also quite worried and concerned about how the economy will fare, etc. I think 2017 has been really a great year. And in some sense, one should say that this is not what we really expected when we started this year. So, and a few things, obviously, and now all that is very much known, but it will be a little useful to just go over what really contributed to this. And one important thing, obviously, I think, which is sometimes gets missed out, is the fact that the industry has done a lot of work in terms over the last 1 year to get retail investors, people from smaller towns, etc., to come into the industry. I think that's been one of the big success stories for this year. And then the last bit, obviously, is the macro conditions have been fairly stable. The markets have been doing well. On a one-year basis, return numbers have been looking strong, giving more confidence to people to kind of allocate money into this industry. And all this movement through the mutual funds obviously has been fairly gratifying for us, I think, for the entire industry and certainly for Axis in particular. Certainly it's been a very, very good year.
Okay. Jinesh, welcome to the show. So is it getting more challenging, or is it a good thing that as more and more money comes in, I mean, you're still finding enough opportunities and enough ideas out there?
So it's a good challenge, I would say. so long money comes by, and if you are able to invest it judiciously, I think there is no problem. So if you take a longer term view, then you are still in a good driver's seat. But if you take a short term view, who knows what happens. So
and long term, when you're talking to your investors, when you say at least 3 years or more?
3 to 5.
3 to 5 years.
Yeah.
Okay, that's a definition that pretty much remains constant.
Yeah.
But, I want to spend the next couple of minutes also talking about the do's and don'ts, Chandresh, because while I think there's no doubt that long-term equity is a great story to create value and wealth, for those who are investing fresh and maybe planning to put, a chunky amount of their savings and money now, is this a good time? What should they keep in mind? What should they avoid, or what should they do to get it right?
Yeah. I think one of the first questions which anybody should ask when he's getting into equity is, why am I getting into it? And the answers are fairly well known, that you want to beat inflation, create wealth for the long run. So the context which we sometimes look at the short run is maybe immediate, like what happens in the next 6 months or 1 year. But I think the real reason why people should look at investing in India, in the Indian equities space, is the next 20-year story. I think we are a great 20-25-year growth story. Wealth is going to be created. It will not be created by all companies in the market. There will be specific businesses which will take advantage of these opportunities, and that's how the wealth is going to be created. If you are not invested in the equity markets and you want to make allocations, today is as good a time to start. How do you do it? Depends on your risk profile. Do you invest all in one go or 6 months, or you stagger it over a 2-year period? It's more to do with risk profiles. Actually, for people who are going to invest for the next 5-10 years, it just doesn't matter. So depending on what the risk profile is, what the asset allocation you want to do, I think this is as good a time.
Okay, Jinesh, your thoughts on the risk? And again, why I'm asking is that, on our show, we are seeing a lot of, let's say, senior citizens get quite excited about equity. They realize that keeping money in a 6% fixed deposit is not going to take them through the next 20 years of their retired life. So they're also willing to experiment. But what are the caveats in case you see any risks on the horizon? What should people keep in mind? Especially some of the less sort of, risk-oriented or risk-prone investors that might be joining in now.
So I think if you see last one year, you have seen most of the money coming into the balance kind of a product. And that is where this senior citizen kind of an investor has parked their money, and I hope they stay for a longer period of time. Their expectations are 10 to 12% kind of return. And obviously, when your FDs are not giving you that return, obviously money has come in from those FDs to balance schemes.
Funds, yeah.
I think the risk is, I would say, as Chandresh was alluding, that near-term volatility will continue. You should not get perturbed by that. Either you keep on investing at all levels. Let's say if there is a 5% correction for various events. So, frankly, it is very difficult to tell that this will be the event which can lead to correction.
Okay, all right, Janesh, we're going to take a break on that note. In fact, when we come back, we are going to ask the gentleman of Axis Mutual Fund what the style of investing is at Axis AMC. We'll ask Janesh whether he's more sort of risk-prone or does he prefer to play a little safe. What is his batting style? And, of course, what are some of the interesting funds that the men from Axis Mutual Fund like themselves? We'll discuss all of that and more after the break.